Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me to discuss VOLQ and election impact on the markets is Matt Amberson, Principal and Option Research at Technology Services ORATS. ORATS provides research including backtesting, live options analytics, scanning, and risk management. Matt, it's great to see you again. Welcome back to Trade Talks.
Jill, it's great to be here. We've seen each other in your studios, at conferences, and now we're at our houses, presumably.
Yeah. Looking forward to getting back in real time, that's for sure. And since we have met last, a new development with Nasdaq is VOLQ, a measurement of the 30-day implied volatility of the NDX that started trading futures on October 5th. What's your take on VOLQ?
Well, this is great for us because we use and calculate something like VOLQ. And VOLQ differentiates itself in that some other volatility calculators look at out of the money options, but VOLQ concentrates right at the money. And what that does is it helps you then compare what's going on with the volatility surface. And so what we're able to do is take that VOLQ and compare what's been going on in the market lately. And it's been a very crazy market. We've never seen this since, I don't know, 2006. Where we're seeing these very small options, 5 delta, which means, or you could think of it as having about a 5% chance of ending up in the money, are being bought at levels we've never seen before. And we could compare those 5 deltas to the VOLQ, which is the at the money, and look at those historically and see that this is a very new thing happening in the market. And really driving a lot of this volatility, especially at the upper levels, Jill.
And how is the election affecting the options markets?
Well, yeah, another thing that we do at ORATS is we look at earnings, and what we've done with the election is we've modeled that as an earnings event. So we've said, okay, well, let's look at Nasdaq and look at the volatilities, like VOLQ is we've determined that it's a steady at the money. So we look at it before election and after election, and we could calculate what the implied election effect is going to be, much like an earnings effect. We'll say things like Apple's going to move at a certain percentage on earnings day because we've looked at those relationships. Well, the election has been really interesting to watch too, because back at the lows of the market, the election implied move was about 4.5%. And then, and that's kind of, I don't know, when Trump got sick or whatever. And before that, it was about 4.2. But, recently it's interesting because it's the election implied move has actually come down for whatever reason. I don't know if, all the things going on in the market, but the election implied move has come down. So we've seen that today. So, I think what we're seeing is people are either getting complacent that the election is not going to move that much, or there could be a president that we don't know is going to happen. The election we don't know is going to happen on election day. And then the volatilities are going to continue thereafter.
Now, earnings season just started last week, the week of October 9th, and your firm ORATS puts out earnings research. How is this season shaping up so far?
Yeah, I mean, with all this other stuff going on, it's like, oh, earnings is almost—
By the way, right?
Yeah, I know. It's like, whereas earnings used to be the primary driver, and we used to, do, and we still do a lot of meaningful research on it. It almost feels like, well, hey, people, you're not looking at earnings, but it's the most important thing to a lot of these companies. So what we saw last earnings cycle in July, we thought, at least I personally thought, I go, wow, this COVID thing's going to come and raise its head in this earnings, and so did the market. The market was implying big moves for earnings, and we saw very little moves. The owners of earnings straddles really took it on the chin last earnings cycle. And this earnings cycle, as you might imagine, are reacting even more to where we've seen the implied earnings moves divided by what actually has happened in the past at low points. So this might be a good chance for the option buyers to get back into the black and because some of these earnings moves, people are not really implying a very big move, and so some of these straddles might pay off finally for these option owners, Joe.
Great, Matt. Thanks for stopping by as always. And you can see more about ORATS at ORATS.com, on Nasdaq's Quandl site, and on Nasdaq.com where Matt blogs. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Joe.